Preparing for a banking and finance at Bank Muscat interview? You've reached Candy Mentor, and this video is for you. We'll walk through 15 key questions you're likely to face. For each question, you'll see a sample answer followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. Why do you want to work for Bank Muscat? Bank Muscat stands out because it combines scale, a strong Oman franchise, and regional credibility. I would position my answer around its leadership in retail, corporate, Islamic banking through Mithaq, and digital channels. What attracts me is the mix of customer impact and disciplined risk culture. In a market like Oman, banking is closely linked to national growth, so I see the role as both commercially demanding and socially relevant. While answering, focus on Bank Muscat's market leadership in Oman, diversified banking franchise, Mithaq Islamic banking, digital focus, customer trust, and why your skills fit a regulated, service-driven banking environment. Question 2. Tell me about yourself and how your background fits this banking role. I would keep this structured. Education, relevant experience, and why banking. My background has built a strong base in accounting, financial analysis, and client communication. For example, I can interpret financial statements, understand cash flow drivers, and work accurately under deadlines. I am now looking to apply that foundation in a bank where risk awareness, service quality, and teamwork matter every day, which is why this opportunity at Bank Muscat fits well. Make sure to cover your education, finance or accounting exposure, customer-facing strengths, analytical skills, and a clear bridge between your past experience and the Bank Muscat role you are interviewing for. Question 3. What are the main products and services offered by a bank like Bank Muscat? A commercial bank earns by matching customer needs with responsible financial solutions. At Bank Muscat, I would expect major product areas to include deposits, current and savings accounts, personal finance, cards, home finance, trade finance, treasury services, corporate lending, and Islamic banking through Mithaq. The key is not just selling products. It is understanding the customer's profile, repayment capacity, risk level, and long-term relationship value. In your answer, talk about deposits, lending, cards, trade finance, treasury, digital banking, and Mithaq Islamic products, while showing that products must match customer needs, risk profile, and profitability. Question 4. How would you assess a corporate customer's loan application? I would begin with the purpose of the facility and whether it makes commercial sense. Then I would analyze audited financials, cash flow coverage, leverage margins, working capital cycle, collateral, management quality, and industry outlook. For a term loan, repayment should come from operating cash flows, not only asset sales. I would also check conduct, existing banking limits, covenants, and compliance with credit policy before recommending approval. Be sure to mention business purpose, repayment source, financial ratios, cash flow coverage, collateral, industry risk, management quality, account conduct, covenants, and alignment with the bank's credit policy. Question 5. Walk me through how the three financial statements are connected. The three statements connect through profit, cash, and financial position. Net profit from the income statement increases retained earnings and equity. Non-cash items like depreciation are added back in operating cash flow, while capital expenditure affects investing cash flow and fixed assets. Debt repayments reduce cash and liabilities. In banking interviews, I would link this to credit analysis because cash flow, not accounting profit alone, repays loans. While answering, focus on how the income statement, balance sheet, and cash flow statement connect. Then link the explanation to loan repayment capacity, working capital, leverage, and credit analysis. Question 6. What is net interest margin, and why is it important for a bank? Net interest margin measures how efficiently a bank earns spread income from its interest-earning assets. It is usually calculated as net interest income divided by average earning assets. If funding costs rise faster than loan yields, NIM compresses. For Bank Muscat, I would discuss NIM alongside deposit mix, loan pricing, competition, central bank rates, and asset quality, because a high margin is only valuable if credit losses stay controlled. Make sure to cover the formula, earning assets, funding cost, deposit mix, loan pricing, interest rate movements, competition, and why margin quality depends on asset quality and credit losses. Question 7. How does International Financial Reporting Standards 9 expected credit loss provisioning work for banks? International Financial Reporting Standards 9 requires banks to recognize expected credit losses before a loan actually defaults. Stage 1 covers performing assets with 12-month ECL. Stage 2 captures significant credit deterioration with lifetime ECL, and Stage 3 applies to credit-impaired assets. I would explain that provisions depend on probability of default, loss given default, exposure at default, and forward-looking macro assumptions. This directly affects profit, capital, and lending discipline. In your answer, explain the 3 International Financial Reporting Standards 9 stages: expected credit loss logic, PD, LGD, EAD, forward-looking assumptions, and how provisioning affects bank profitability and regulatory strength. Question 8. Why are CASA deposits important for a commercial bank? CASA is important because current and savings deposits are usually a cheaper, more stable funding source than term deposits or wholesale borrowing. A strong CASA base helps protect margins, supports liquidity, and gives the bank more flexibility in pricing loans. In a customer conversation, I would focus on salary accounts, digital convenience, cards, payments, and relationship benefits, because transaction banking often deepens the full banking relationship. Be sure to mention CASA as low-cost funding, its impact on net interest margin, liquidity, customer stickiness, salary accounts, transaction banking, and why strong deposits support profitable loan growth. Question 9. What steps would you follow for KYC and AML compliance when onboarding a customer? KYC is the first control that protects the bank from financial crime, sanctions breaches, and reputational damage. I would verify identity, beneficial ownership, source of funds, expected account activity, and risk category before onboarding. Ongoing monitoring matters just as much. Unusual cash deposits, rapid fund movement, or inconsistent trade activity should be escalated. The right approach is always professional, documented, and respectful to genuine customers. While answering, focus on customer identification, beneficial ownership, source of funds, sanctions screening, risk rating, ongoing monitoring, suspicious transaction escalation, documentation discipline, and balancing compliance with customer experience. Question 10. How would you handle an angry customer at a branch or over the phone? I would first listen without interrupting, because most frustrated customers want to feel heard before they accept a solution. Then I would confirm the issue, apologize for the inconvenience, check the facts, and explain realistic next steps. If the issue involves charges, cards, or account access, I would follow policy and escalate where needed. My aim is to protect the relationship while staying calm and compliant. Make sure to cover active listening, empathy, fact-checking, policy-based resolution, escalation, calm communication, documentation, and how you protect both customer satisfaction and the bank's operational controls. Question 11. What is capital adequacy, and why do regulators monitor it closely? Capital adequacy shows whether a bank has enough capital to absorb losses and continue operating safely. Under Basel-style rules, capital is compared with risk-weighted assets, so riskier loans require more capital support. I would mention CET1, Tier 1, total capital, and buffers. For a bank, growth is not only about increasing assets, it must be balanced with asset quality, profitability, liquidity, and regulatory capital strength. In your answer, talk about regulatory capital, risk-weighted assets, CET1, Tier 1, buffers, loss absorption, prudent growth, and why asset expansion must be supported by capital strength. Question 12. Can you explain how a letter of credit works in trade finance? A letter of credit reduces payment risk in international trade by substituting the bank's creditworthiness for the buyer's. The issuing bank commits to pay the seller if compliant documents are presented. I would highlight parties: applicant, beneficiary, issuing bank, advising bank, shipment documents, and discrepancies. It is not a guarantee of goods quality. It is a document-based payment mechanism, which makes accuracy and timing critical. Be sure to mention the buyer, seller, issuing and advising banks, document compliance, shipment documents, discrepancies, payment risk reduction, and why letters of credit are document-based instruments. Question 13. What factors would you review before approving a retail loan? For retail lending, I would not rely only on salary. I would assess income stability, employer quality, existing obligations, debt burden ratio, credit history, account conduct, age, tenor, and collateral where relevant. For example, two customers with the same salary may have very different repayment capacity if one already has high commitments. Responsible lending protects the customer from overborrowing and protects the bank from future defaults. While answering, focus on income stability, debt burden ratio, credit history, account conduct, employer quality, tenor, collateral, affordability, responsible lending, and preventing future delinquency for customers and the bank. Question 14. How is digital banking changing customer expectations in Oman? Digital banking matters because customers increasingly judge banks by speed, convenience, and reliability, not only branch presence. For Bank Muscat, mobile banking, online payments, cards, wallets, and self-service channels can improve customer experience and lower transaction costs. I would also mention cybersecurity, fraud monitoring, data privacy, and financial inclusion. The best digital strategy combines convenience with trust, because one security failure can damage confidence quickly. Make sure to cover customer convenience, mobile and online channels, payments, cost efficiency, cybersecurity, fraud controls, data privacy, financial inclusion, and why digital trust is critical for banks. Question 15. Why should Bank Muscat hire you for this role? You should hire me because I bring a mix of analytical discipline, customer focus, and willingness to learn. I am comfortable with numbers, but I also understand that banking depends on trust, communication, and execution. I would contribute by preparing accurate analysis, following controls, supporting clients professionally, and escalating risks early. I may not know everything on day one, but I learn fast and take ownership. In your answer, connect your strengths to banking needs: accuracy, integrity, customer service, analytical ability, teamwork, risk awareness, learning agility, ownership, and readiness to represent Bank Muscat professionally. If you are still with us, congratulations. You are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.